There's a popular English proverb that says, necessity is the mother of invention. In today's video, I'll be answering the question, what necessitated the invention of money market fund? My name is Pius Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa. So you can trace the beginning of money market fund to 1970 in the US. And the US was experiencing a situation that is very familiar to Kenya today, and it is called interest rate capping. And the banks could not give depositors a rate beyond a certain fixed rate. Then suddenly, inflation began to surge. And as inflation increased, the cash investors started experiencing erosion of their money, the value of their money, because the rate of inflation was higher than the rate that they were earning from the banks. Now, there was this very strong need to find an alternative investment where they could earn a return that was higher than they were earning in the bank deposits. And then the brokers and other financial players, they began putting together pools of investors into funds, and these funds were channeling money to commercial papers, and that effectively they were bypassing the banks and effectively also bypassing the banking regulation around the interest rate capping, and that was able to avail to investors a return that was much higher than they were able to get from their bank deposits. For the next decade, 2 decades, up to early 1990s, the money market product had become so popular that it had risen to over $300 billion. And now the banks could not just sit on the sides, they wanted a piece of the action. And the banks, with a little bit of liberation of their regulations, the banks also entered into the race of accumulating money market funds. And today, banks command a fair share of the money market fund assets. So the money market product was necessitated by the need for investors to access better earnings that they were earning in the bank deposits, and that was the pressure. And today we have amazing stories. For example, the Bao, that is Alibaba connected. It's only 4 years old, and today is the largest money market fund in the world, commanding over $165 billion. It's extremely disruptive, and these guys were just targeting, investors or rather online users who had some excess cash. In fact, Yuobei is a Chinese word meaning leftover. They wanted the investors, they were targeting investors who had some change and was earning nothing, and that is what has accumulated to $165 billion. And today, because of their large numbers, they are able to negotiate better interest rates from the banks compared to what other individual investors would otherwise get. So once again, please don't forget, the invention of money market fund was triggered by the need for investors to access earnings that were higher than they could get in the bank deposits, and that's why we need a money market fund. So at Nabo Capital, we sense the need for the market to access something that would offer them safe returns, easy access to cash, and at the same time returns that were generally higher than what they would otherwise get in the bank deposit. And that's really what triggered us to put together a money market fund. And through the money market fund, what we really do is to pool monies from individual investors, and we use that money to buy treasury bills, short-term commercial papers, even negotiate better interest rates from the banks. And that value that we create, we bring it back to our investors, and they're able to earn better rates than they would otherwise earn if their money was lying idle in the bank. there's a huge opportunity or a huge gap that we do sense in the money market fund today in Kenya. If you look at how much money is cumulatively held by fund managers through the money market fund, we're talking of 44 billion shillings. Compare that to what is held through bank deposits, 3.19 trillion shillings. Money market funds are just a scratch. They're just scratching the surface. And the big thing is that people don't really know what a money market fund is. They don't really see it as an alternative to having a bank deposit. In fact, to me, every Kenyan should have a bank account, should not just have a bank account, should also have an investment account. And that investment account, the first place to start is a money market account. If you look at the money, I think you have about 10,000 or so money market accounts. Compare that to over 10 million bank accounts in the country. We are just scratching the surface. Thank you for watching. I hope this video has helped to enlighten you on money market fund. And I'm going to be very straightforward. Everybody must have a money market account. And if you want to engage us, please come to our offices, or you can engage us on our various social media platforms, or you can even call us or email us, and we will help you to open your first money market account. My name is Pius Mugo, Managing Director of Nabo Capital, and you're watching Invest in Africa.